As I stated in our first session together, we have 5 steps. And I said we are a star. I am a star if I recognize revenue. So we did the identifying of the contract. Now we're going to go on to the S, the separation of performance obligations. How do you determine when something is or isn't a performance obligation? Well, very simply. Are the goods and services highly interrelated, and do they involve a significant integration of services? If that's a yes, and notice the word "and" here, the bundle of goods and services is significantly modified or significantly customized to fulfill the contract. If both of those are yeses, we have a bad answer. We can't break it up. It's considered one giant performance obligation. You say, well, what's wrong with that? That means you have to defer the revenue until both are completed. So even if they pay you at the end of step 1, you would debit cash and credit deferred revenue. That's a liability account, not an income statement account. But if one or both of those questions that I just asked are no, just one or no, one of them, then you ask yourself one additional question. Are the promised goods and services distinct from other goods and services in the contract? And if that's a yes, bing, you got a good answer. You can break it up into bite-sized pieces and recognize the revenue as each separate performance obligation is done. So how do you determine if they're distinct? Well, do you regularly sell each of these items separately? Do your customers or your competitors sell these things separately? Or could the customer use this item without any additional items needed to ultimately satisfy their objectives? If any one of those is a yes, like I said, you can break it up into separate performance obligations. And that's a good answer. That's what you want to see, because revenue being recognized earlier rather than later is always a good thing. Now, what's interesting here is there was also an ASU 2016-10. And what it dealt with was 2 items. One, it said, what happens if there's an immaterial performance obligation? Do you really have to break that out? And they said, no, immaterial performance obligations you don't have to worry about. And a second item, they gave each of us an option. They said, what about shipping and handling? You can either treat that as a separate performance obligation, or you can treat that as a fulfillment. Either way is fine. Just make the decision and hold consistently to it. So the separate performance obligations is the second of the 5 steps, and it's remembered by I am a star.